Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Rockwell Diamonds trims its capital raising down to 20 million Canadian dollars. Kumba Iron Ore requires 20 billion to 30 billion rand capex for 70 million tons a year. And Amplats pursues shallow reef and delays its deep capital-intensive projects. TSX and JSE-listed diamond miner Rockwell Diamonds, which does all its mining and diamond beneficiation in South Africa, has trimmed its capital raising target down to 20 million Canadian dollars.
Subsequent to the roadshow, which we're kind of well through at the moment, we've had feedback from many of our investors that they would prefer a smaller capital raising and to look at maybe coming back to the market at a later stage to complete the fundraising of the Votuspun mine. So we're looking at targeting about $20 million at the moment and taking Votuspun mine in actually two stages or two phases.
JSE-listed iron ore miner Kumba Iron Ore estimates that it will be required to spend from 20 billion to 30 billion rand capital to achieve its production target of 70 million tons of iron ore a year in South Africa from 2019.
If you just have a look at the capital intensity that we're talking about now, of about $200 per annual ton, you can see that, well, give you an example. At the moment, Kolomela is coming in at quite low capital intensities of 8.5 billion rand for 9 million tons. So, it's likely to be, probably likely to be 2 or 3 times that. So this is very significant. This could be 20, 30 billion rands worth of capital, but could create, each time you spend that kind of capital, you create not only the direct jobs that'll come from these expansions. If you have a look at the Kolomela project, that'll be roughly 1,000 jobs. So at this point in time, probably about 850, probably increased to about 1,000 jobs for that 9 million tons. But that's at very low beneficiation. So a new project with beneficiation will require more people.
The world's biggest platinum miner has decided to pursue shallow, low-grade reef and delay the exploitation of its higher-grade but more capital-intensive deep shaft options in Rustenburg, in sharp contrast to the current approach of its main rival, Impala Platinum, in the same area.
The deep Merensky resources would require Tier 3 and Tier 4 shafts to go very deep. The cost of mining at that depth will increase because of the distance travelled and the cost of refrigeration and all of those other good things. And we have, over the past many years, had a extract Merensky strategy, which has resulted in UG2 being left shallow and at surface. So what we've done is we've looked to improve our mining costs, which takes care of the lower grade that UG2 presents, and we've looked at increasing the efficiency of processing UG2, especially in the concentrating phase. Now that puts us in a position to go back to surface and with very little capital access huge UG2 reserves and resources. That will significantly change our capital position going forward.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.